The ultimate here is to be able to build a private family banking system to the point where nobody in the family has to go and ask permission from a bank for our households, for our livelihoods, for our business, for anything that we do as a family. We keep the money in the family. Hello and welcome to the Durham Talents channel. My name is Jesse Durham. For this installation in our family banking series, I'm going to show you here soon where I had to sit down with our two oldest sons and we made our most recent money deal together. Lauren and I have been intentionally cultivating this private family banking system for over a decade now. It's 2026 at the time of this recording. And we're having more and more on-purpose conversations with our sons, and not just conversations, but we're actually letting them contribute to deals, to business, to private family financing within the family. When we have something that we're going to be doing as a family, we can have a conversation with our 10-year-old, with our 12-year-old, with the money that they've earned. They do work around the house. They work with other family members. They have earned money. They get gifts. They get birthdays. They get Christmas and things. So they've earned money in a few different ways. Of course, some of that is from doing these deals together. So I'm going to show this sit down with our boys so you can hear our language, our conversation. And my hope is to inspire you, if you've not yet implemented this concept of becoming your own banker by R. Nelson Nash, you can learn about it and you can do it. We've done this, like I say, for well over 10 years now, and you can learn more here on the channel about that. This particular conversation is about a money deal that we did with our sons. A standard that we've set for ourselves is 10%. Our sons, when they want to do business with us, when they want to pool capital with us on a deal that we do, and we write out, we've got contracts, we write out contracts with our sons. We're doing this as a business. This is banking. If you go to get a loan somewhere at the bank, you're going to be filling out their paperwork. You're going to be asking them for permission to do the thing, and they're going to hold collateral over your head. So here's privatized. Here it's in-house. Here it's in the family, but it's still being run as a business. And we've set a standard of 10%. We want our boys to be able to expect 10% on their money when they put it to use. Because, and this is important, why we're doing that on the front end for the money that they have is, of course, we want to teach them that, well, there are a couple of ways to earn income. Yeah, you could go work with Papa using your hands. That's great. We should all pursue the things that we want to do. Active income, it's a beautiful thing. But also, the money that we earn can be earning more money. The second way to earn income is money earning money. So people earning money, money earning money. We want to teach that principle. We're putting it in practice. They're doing it at 10 years old, 12 years old. It's a beautiful thing. And our younger children will be able to do it even sooner. Actually, recently, Lana, our daughter, just turned 6, came in on her first deal. So, what'd you ask? When are we going to the movie theater again? When are you going to do some business with Daddy like brothers? You going to do something with Daddy? Yes. Perfect. Well, when you do some business with Daddy, then we can use what we earn to go to the movie theater. How about that? We'll use our business to pay for us to go to the movie theater. I don't want to exclude her. We'll see more about that as well. But they're learning about how money can earn money for them is one thing. The importance of EVA, the cost of capital. If you put money somewhere for something, is there risk? Are there guarantees? Do you stand to earn? These are valuable things to point out and to teach and to consider for oneself. We're starting young with them. We want them to have an expectation that they will earn good capital on their capital. 10%, something that we have done more than once. We've done this several times with them. Because again, in the future, another aspect of this is when our children get to the age where they're ready to get married, they're ready to go to college, they're going to be launching a business, they're going to have a growing need of capital. We all have a growing need of capital. We want that pursuit of capital to be kept in-house. Meaning, if they, in their capacity, are not ready to go out and get that car themselves, do they have to go to a commercial bank to ask for permission? And then the bank's going to hold that collateral over their head, etc. And they're going to be bleeding out interest dollars for all the cars that they ever buy throughout their life? No, they can come in-house. That money can stay in-house. It'll still be a contract. There will still be the collateral of the car, or there can be. You can do your private family banking how you want, but there could still be collateral. There will still be interest on. So if my wife and I charge 10% on that car loan and they pay an interest like they otherwise would have, you're always going to pay interest, folks. Credit or cash, doesn't matter. Either you're paying someone else interest or you're losing the opportunity to have earned interest on your capital. We're teaching them that on the earning side, but we will also want them to understand that on the consumption side. We're going to drive cars, we're going to live in homes, we're going to take vacations, we're going to do these things. Our capital has a cost. Interest should be paid on that, but now we get to keep that in house. And for you folks that haven't wrapped your minds around whether this is good or not, think this out long range. My wife and I have whole life insurance policies on ourselves that we use for our private family banking. We own policies on our children because they're minors currently. The more premiums we can pay because of keeping interest dollars that otherwise would have gone to a commercial bank, the more we can keep that in-house, and that allows us to pay premiums that increase our death benefit. Well, who do you suppose are the beneficiaries of these policies? On myself, on my wife, right? And then if you walk that out, okay, so our children are going to receive that income tax-free windfall when we pass, and those policies pay out to them. We've also started policies on them. We're accounting for windfalls that our grandchildren will experience, and our grandchildren are not even here. So that's a bit of my mindset, my philosophy. Just trying to share that with you here real quick before you see this sit down with the boys, and I hope that you enjoy. Hello and welcome to the Durham Talents channel. My name is Jesse Durham. We're back for another installation in our family banking series, and that's why me and the boys are sitting down. We've had a busy day of running to the store, doing stuff on the property, business stuff, but we have our own private family banking business to attend to because we've made some deals recently. These guys have been working. Jacob's been blowing leaves in behind us. Josiah's been working on the homestead, helping with animals and stuff. Lots has been going on. He's been mowing. They've been doing all kinds of stuff. So it's time to get settled on some things. Do y'all want some money?
Yes.
Okay. Awesome. Fantastic. So we've already documented how we've had conversations with our boys now because we are getting these statements in the mail about premiums being due. We make policy loans together. We're receiving dividends on these policies, and we're just having more and more conversations with our boys about how these policies work, why we prioritize our family's money, our family's cash flow going towards these several assets that we own. We own 7 to date. This is the last day of October 2025. We're actually less than a month away from our 4th baby boy being here. We've been doing infinite banking for 10 years. Lots of milestones have recently been happening. I'm an authorized IBC practitioner from the Nelson Nash Institute. Really cool stuff. But we have been showing some deals that we've made together recently, and it's come payday on those deals. So these boys are going to be getting a return of their principal, and they're going to be getting some interest on their money because we've talked about the 2 ways that you can earn money. What are the 2 ways? Josiah, give me one. What's one of the ways that you can earn money?
Working.
You work for it. You, with your hands, with your time, with your skills, you can go and work for it. And y'all have been doing some of that, right? The mowing, the leaf blowing, doing some rock work on the driveway, just different things, okay? Jacob, what's another way that you can earn money?
In your policy.
Putting money in a policy or some other place where it's going to generate growth. Now, it just happens to be the case with whole life insurance that's from mutual companies that pay dividends, dividends being extra. That's just profitability from the company at large on top of the guaranteed growth. So that's why we prioritize money to policies, paying premiums into these policies. And these boys have even been participating because of their ages now. How old are you, Josiah?
10.
Jacob?
12.
They're old enough that they are earning money with their hands, and then they want their money to be earning more money. So we have had ongoing conversations recently about how we could be paying premiums together. We could be pooling resources as a family so that the boys could be participating in this growing and compounding pool of capital that we're building for our use, because we have plans on things that we want to spend money for. Some of those things are going to be fun. Some of those things we're just going to have needs, and this is where we do our family financing from. Some of these things that we want to spend money on in the future can buy us stuff that will help us create more money. Josiah, can you give me an example of something that you're working towards, something that you're saving up for, that if you use that, you'll be able to create even more cash flow for yourself?
I'm wanting to buy a mower.
A mower, and then you could go to work, right?
Mm-hmm.
Use business equipment for your work, more income. I love it. It's beautiful. All right, so do y'all remember how much money you had put up for our premium paying deal?
$398.
$300. It was $300. Awesome. So they each had $300 that they wanted to put towards premium. I made an agreement with them that we would get them 10% on their money. So it's time to pay out. Because we have taken a policy loan. We paid those premiums together. Of course, Lauren and I have been paying into these policies for years. Actually, today, I paid some thousands of dollars into all 3 of our current children's policies because Lana has a policy as well. And I'm really excited that here in the next couple of months, we could be getting another policy on baby number 4. So it's just super exciting, but it's time to, because we've made a policy loan now, it's time to be able to get these boys their principal money back, their seed money, plus the interest for the next things that we'll do together or that they'll do or whatever the case may be. All right, Josiah, 1, 2, 3. Jacob, 1, 2, 3. So there is your money back, right? So there's rule number 1 from Warren Buffett. He says rule number 1 is don't lose money.
Yeah.
Great that we put it into a guaranteed contract. Josiah, there's your original money. Now, the money that your money made. What is 10% of 300? It's going to be good. This is a good learning lesson all the way around.
10.
Thanks. All right, so what is 10% of 300?
10.
Nope.
No, 10%. 30.
Good man. Good man. Good job. Right. So $10 for every $100. But since you gave $300, it's 10 plus 10 plus 10. It's $30 each. Okay, 20 each, and then 30, and 1, 2, 3, 4, 5. Okay, double check me. There's your return of your money, your seed money. Make sure that there are $30 of growth money, please.
You got 30. You got 30.
Awesome. So that is how we create and would encourage you to create education around money and business and just conversations about how to keep more money in the family. The way for us that we found to do that is the infinite banking concept. You can read about it in the book Becoming Your Own Banker by R. Nelson Nash. This is a concept of privatizing your family banking so that you can keep more money in your family, perpetuate that income tax free to the multiple generations that will follow you, and do more in the meantime. Using whole life insurance has a guaranteed death benefit. It's beautiful. I want to leave tools in our children's hands, no question about it. But I want to do stuff now. There are so many living benefits to having control and access and guarantees on your capital. There are things that we can do now. So this is something that we've personally implemented for over 10 years now, and I professionally help people implement the concept all across the United States. If you want to learn more about how to keep your hard-earned money, get in that book, watch my introductory presentation at durhamtalents.com. If you're seeing something about infinite banking for the first time, those are the resources that you need to go to. All right, boys, tell me, how much did you have to work to get the growth money? I know you worked to get the other money, mowing, working with Papa, whatever. How much did you really have to work to get this growth money?
Nothing.
That's pretty cool, right?
Yeah.
Do you think you'll do that just one time?
No.
Think you'd like to make another deal?
Yes.
Fantastic. And I love seeing what their goals are, talking with them about it, and us moving in the same direction to be able to make that happen sooner in a more sure way. And just, we're doing life together. We're doing more together instead of every person, every individual just going their own way, doing their own thing. If we're united, we can do more together. We can be better together, and we can be together more by doing family banking business together. So while the boys count up their money and see where they're at now that we have paid them for work here around the property and we closed up on this money deal, and I'll be sharing screenshots of all this, of where we've documented the process. That's an important point. Even when you're making agreements within the family, it's important to document things. It's important to treat it like a business. Like a business. Be communicative, be transparent. I actually took longer than I wanted to on a deal recently and paid extra to the boys to account for that time. So communicating this is important. Documenting is important. And if you have questions about privatizing your family banking, feel free to put those questions down in the comment section below. I can address them. And of course, something that I offer to my clients is to have multi-generational family calls. So I will do a Zoom call. I will, if you're a local, we can meet in person, but Zoom call, and I'm talking to 3 generations. I'm actually on the hunt right now because I've got multiple families where 3 generations. I mean, we're only working with 2 here so far, even in our own family. We don't have grandchildren yet, but I'm already working with clients that have 3 generations of policies implemented and the concept implemented. It's a beautiful thing. I'm looking for a family with 4 generations. I'd love to be able to do that and facilitate that. But this is an ongoing series that we have, the Family Banking Series. If you have questions, put it in the comment section below. If you'd like to line up this type of a family conversation around your goals, your plans, your aspirations, I would love to be able to facilitate that. And if you have something in particular that you would like us to cover that we haven't thought of yet, let me know. Just reach out to me directly or put that suggestion in the comment section below as well, please. And I know I'm breaking all the rules by asking for multiple things right here at the end, but if you have a family member, friend, maybe you need to be doing these types of things in your business, you have business associates or partners, then I'd be happy to help facilitate that conversation as well. Boys, do you have any more thoughts about how this went?
No, not really.
Okay.
It's a good deal, though.
It is a good deal. Well, I'm glad. I mean, thanks
You're welcome.
for paying attention. Thanks for learning. Thanks for deciding to do stuff with mommy. I think it makes things a lot more fun, and I like the conversations that we get to have about what it is that you're going to do and what it is that we're going to do together. I think it's terribly exciting. Boys, where can folks find us? Jacob, tell them the website.
DurhamTowns.com.
And Josiah, what do we tell them?
Live and leave a lasting legacy.
Statements, because we use our dividends to go back into the policy. This one's Jacob's. All right, so on Jacob's policy, your dividend was $53.84, and it bought $709.40 of additional paid up insurance, of additional paid up death benefit. $53 and change bought $700 and change. That's a lot. That's more than 10x. That's more than 10 times. It's like taking $20 and turning it into $200 in the future. It's very cool. Awesome. Great. Love getting dividend statements in the mail. Did you count up what you got?
$400. $410.
Man, nice even money as well. Fantastic, boys. That was awesome. Well, here's what I'm gonna do, because I would rather give you too much than not enough. Took me some extra time. There you go. Great. Now, let's talk about what y'all owe me.
What?
What have I said? Let's see. That water hose, Josiah, that we bought today, that was $50 before taxes and before pickup and drop off and whatnot. And my time's worth something, right? Oh, and then that propane tank refill was another $15, so $65. What do you owe me for?
Nothing.
I didn't think so either.
Yeah.
Yeah.
Oh man, I only have $320.
How much?
$320.
It's more than you started with.
Yeah.
It's more than you started with.
Just fucking me.
How about this? For the propane tank, it was $15. I'll pay $10. I'll let you pay $5.
Yeah.
For the garden hose, it was the green hose that got poked. I think it was a shorter hose. I bought a nice longer hose, so it wouldn't be $50 to replace the one that you did. I'll do the same thing. I'll take, just like I did with that, out of $15, I took 1/3. I'll take 1/3 of this.
Yeah.
Is that a good deal?
Sure. Nah.
Okay, awesome.
I got $360. 410.
I love you, boys.
I love you. You want to try the old $100 bill?
Hey,
No.
hey,
25.
make sure that gets put up well.
Sir, can I have one of the old ones?
And if y'all are ready, here soon, we'll do more work.
Sure.
We'll talk about our next deal if you want.
Sure.
Hey,
Hi.
hey, tell my grandchildren, tell my great-grandchildren, live and leave a lasting legacy.
No.